Good morning. Happy Wednesday, everyone. I'm Irene and I'm here with Jane from Supporting Strategies. And today we just want to talk about some of the COVID loans, some of the PPP loans and the EIDL loans that some of our clients had applied for and received that were those emergency loans. When it comes to those PPP loans, there were a couple of rounds of loans that were available. Most of my clients took, if they did have the employees, that would require the loans to be taken. They took at least one round, and then I have clients that took up to 3 rounds of the funding as well. And so for the PPP loans, this is just a reminder that those do need to go through a forgiveness process if you'd like to apply for forgiveness. So every bank is different, and it depends on what bank you use to apply for the loans. But there is a process by which you would have to fill out an entire application and be able to apply to have those turned into grants rather than loans. And the first round had a much easier process to do that by, for the most part, depending on how much was taken. But for the most part, and for most businesses, there was very few documentation that was required of the businesses. However, for the second round, they definitely did require a lot more information, a lot more documentation to come in. Now, for the EIDL loans, those are actually loans, and those are not going to be converted into grants, even if they go through a certain process. And even if there is any extra documentation to fill out at this time, we're not expecting those to be converted into grants. And some of those were given at an interest rate as low as 1% and onward. Now, when the EIDL loans, we've run into a lot of our clients who've applied for both the PPP loans, had them converted to grants, and then also applied for the EIDL loans. And the questions have come in of whether they can use the EIDL loans for business expansion of buying buildings, perhaps buying cars, buying certain equipment and manufacturing. And now equipment and manufacturing, if it is in furtherance of the business and it keeps the business active, that would be a proper likely use of the funds. And again, all of this should be, as with anything that we discussed, all of this should be reviewed individually because every business is so different and every loan would be so different. But if it's within and for the furtherance of the business or to keep the business going, that should be a proper use. Now, where I've become worried is when my clients have decided to buy investment properties that have nothing to do with their underlying business with the money that they received under the EIDL loans. And so they've come in and they've said that, well, we have all this funding, now we can give it back, but why don't we just use this for some personal investments? And of course, that is not what these loans were given for. These were emergency loans. And the concern there is that it is government funds. And so whenever you're taking government funds, even if it's a loan and you're repaying them, they're for a certain purpose, just like the SBA loans. They're a lot of times given for a specific purpose, and you fill out a specific purpose when you're applying for them. And so if there is ever an audit period, and the concern could be that given the state of where our economy is going, there could very well be a certain audit period at some time. And if there is, and they begin to audit these, and they were used for an improper purpose, we're concerned what the penalties might be there and what that would look like in the future for potentially future possible other loans with the government, or even something as drastic as being put on a certain blacklist or watch list. So we don't yet know what that would look like, but the concern has everything to do with where our economy is going, how much of these loans were given out, and the fact that at the end of the day, this is not what these loans were used for. So I definitely recommend taking a look, if there are excess funds, how to properly account for them, what they were used for, especially when it comes to the EIDL loans, where those were taken out as loans, because the PPP funds, they are going through a certain process to be reviewed if they were taken and used correctly. Here, because there isn't any immediate review just yet, we're concerned that they're being used improperly. Now, I would like to ask Jane a question, because from our end, we're looking at this from a cautionary legal perspective. But what I'd like to ask is, Jane, when it comes to accounting for these loans, what should our listeners know for the proper accounting and bookkeeping of the loans?
Hi, everyone. Thanks, Irene. Yeah, I think you touched on a lot of great points, especially with the EIDL. I know that I get the same type of questions. So I'm just going to kind of go through some of these and see how I would tackle it from the accounting standpoint. So when it comes to the Paycheck Protection Program, when our owners were getting the funds, we would put that as a loan on the book so that it would appear on the balance sheet. Once we applied for forgiveness, and once the forgiveness was granted and they got a letter about it, it would then be removed from the balance sheet and be put back on the profit and loss as other non-taxable income. And then further, it gets sort of moved on the personal level to the equity section. But according to the accounting standards, we were supposed to put that as other non-taxable income on the profit and loss. So again, like you said, it has to be properly, we had to provide some feedback depending on the amount of PPP loans received. We had to give some sort of backup for payroll and things like that. So when that's done, PPP was sort of easier to track. It was just a loan and then it gets forgiven. With regards to EIDL, that's a little bit different, right? So that's an actual loan. Nothing of that is going to be forgiven. But like you said, the funds that come for the EIDL needs to be only specific for the business needs. So it could be other sort of like business need that need to be, we don't know yet how that's going to look, but we do need to keep proper bookkeeping records. We need to see how much money was spent on certain things to run the business, what it is, payroll, supplies, cost of goods sold, all of that. I mean, the good bookkeeping would be properly tracking each of the funds that were taken from EIDL. So let's say if we have a separate bank account for that specific loan, and then all the money that is coming out could be then spent towards certain business needs. I know that most of the people haven't been doing that. It's just kind of been commingled with everything else. But if we do going to get audited, it's going to be much harder to then pull it apart and say, well, these funds went for certain things. I know with the chartered venue grants and the restaurant funds that some of the restaurants received, we actually had to keep it in a separate sort of bank account and keep track. And I know that with one of my restaurant clients, they actually were able to receive the RRF funds, which were pretty much cut off almost immediately because they just ran out of money. We have to have proper bookkeeping specifically for that fund. It is going to be extremely high audits on that. And even right now, they're constantly trying to ask us for backup and seeing what the supplies were spent for this. There's a lot of questions coming to that. So I could only see how in the future there's going to be more and more questions when it comes to that. So basically the answer to that is that you really should separate the funds when you receive them. And then once you spend the funds for certain things, you just have to track and make sure that this is eligible. And eligibility is rather simple. It just has to be towards running the business. And like you said, it really should be strictly within the business and not for any other investment opportunities. And I think most of the funds kind of go back to the same sort of concept of keeping it separately. I think that kind of covers it, right? I feel like I answered that question with the accounting standpoint.
Absolutely. And that proper bookkeeping, proper record keeping is so important when it comes to the loans. It's so important when it comes to that concern that I have, that if these are ever audited, and really being able to not have to backtrack, because we all think that we're going to remember everything until it's time to actually show the records and the documents, and then we don't remember anything, of course. So it's very important to make sure that we have all that available to us.
Okay, great. Well, thank you. Thanks, everyone. Have a good day.